The jobs report. The private jobs report usually nobody cares about. Typically nobody gives a flying hootie about the ADP report, except now that it's all we got. Now y'all finally like it. Usually y'all hate it. Now y'all want it. So fine. The ADP report, that's what we're gonna get. Welcome on in, everybody. Obviously, this morning in about 30 seconds, we're going to be getting the ADP jobs report. Pretty excited to see what the data is. Expectation is right now 30,000 on average. It was 40,000 yesterday. It was 35,000 last week. The numbers are all over the place. We'll see what happens. It's going to be fun. And somebody's complaining about audio. Okay, I'll do this. There you go. How's this? Is that audio better? That should be better. But anyway, so the jobs report will be out in about 10 seconds here. So let's see what we got. We're expecting 30,000. 42. Oh, thank goodness. Okay, that's good. We got a good report. 42,000. That is good. Thank goodness. That is way better than what it could have been. We were just hoping that we weren't going to get something massively negative. It's actually, if you think about it, the Kalshi betting markets, they were looking for about 30,000 jobs. So it's actually quite remarkable. It makes you wonder, like, hey, are there people inside that are making bets on this? But this is good. So I'm happy to see this. 42,000 is the survey. Take a look at this. The ADP forecast on Kalshi was 45,000. Actually pretty impressed with that. You got to give credit to this. That's pretty dang close. So it comes in at 42K. We'll go look at the actual details in just a moment, but that's way better than any kind of negative read. I was worried that my estimate was 18,000. So, I was worried we would get something below zero. We didn't. But I was hopeful that we were going to get at least that sort of break-even labor number. That's what we got here. We got a break-even labor number, which is great. Now, we're going to go through the report in just a moment, but this should be broadly optimistic. Now, keep in mind, this ADP report isn't going to include any kind of Doge layoffs. It's not going to include any kind of government layoffs, because this is a private payrolls report. Now, right now in pre-market, we've got the NASDAQ barely reacting to this, about 18 bips here on the NASDAQ. AMD is still down about 3.4. Tesla's up about 1.2 after shaving 5% off yesterday. Yesterday was obviously a bit of a challenging day. Bitcoin back to 102.4. Yesterday we were as low as in the 98 range there for a moment, so it's pretty remarkable. But what we saw last month, let's look at last month quickly. Last month, we saw a negative 32,000 jobs report in the last data report. Now, we're up at 42,000, which is great. Keep in mind, last time, they also recalibrated the report, resulting in a reduction of 43K jobs in September. But even if you added that 43K back in to that negative 32, you'd still only be at 11,000 jobs. So coming in at 42,000 now, I'd say that's pretty bullish so far on private payrolls, especially since that includes October. Now, we had a lot of layoff announcements in October. Something to know, though, about layoffs is usually when you get laid off, you end up getting something like a 2 or 3 months severance package. When you get those packages, you typically don't file for unemployment while you have your severance. So I know a lot of people were thinking this was going to come in low because of those layoffs announced in October. But remember, those Amazon layoffs, for example, 14 to 30,000 layoffs, those were announced at the end of October. A lot of folks got about a 60-day, maybe 3-month window to sort of continue to receive pay and health insurance benefits via severance packages, some even as much as 6 months. And those folks are generally not going to show up on unemployment until that severance rolls off and they still haven't found a job. And so obviously the hope is that they can find a job before their unemployment wears off. So take a look at this. Private employers added 42,000 jobs in October. Last month delivered a rebound from the prior 2 months of weak hiring, but the bounce was not broad-based. Education, healthcare, trade, transportation, and utilities led the growth. For the third straight month, employers shed jobs in professional business services, information, and leisure and hospitality.
One of the things you're finding with leisure and hospitality right now, and this is something to remember that I think a lot of people have forgotten, is there's still somewhat of an Ozempic effect going on, where people are just not ordering as much food at restaurants as they used to. Just on net, we have a factual reduction in the number of calories that Americans are eating, and it's showing up in our restaurant stocks, whether it's Chipotle, whether it's cheesecake, they're all getting hit. Dave & Buster's, 50% of their revenue roughly comes from restaurants. You've also got this sort of business services and information idea. This is really that white collar laying off that you're seeing, especially at that middle management layer. You saw some of that initially at Meta, where people said, "All right, we're gonna streamline the business organization," and that's now falling onto many organizations across the entire country. I mean, we did the same thing, at my startup. We're like, wow, we don't need this many layers of people, especially, well, a smaller startup. It's always a little more challenging to calibrate. We've calibrated really well right now. But usually, you go back 3 years ago, it's like, there's a lot of work. Surprisingly, now, with some of the things that would have taken us more people, we can augment with software and AI, and it's really exciting. It's also why we're launching an AI product. Reinvest! But anyway, private employers added jobs in October for the first time since July, but hiring was modest relative to what we reported earlier this year. But that's okay. That's the anticipation, because remember, earlier this year, we didn't have sealed borders. We didn't have deportations. Opinions on those are really for a topic in a different video. But this might actually be above our current break-even level, which to me looks like you might actually be reducing the odds of a Fed rate cut here in December with this ADP report. So this is just sort of a broad overtime change here in private employment. Here you can see who added jobs. So you could really see this is somewhat of a difference between, I hate to say it, but it's really like big versus small, rich versus poor. You can see the businesses struggling the most are those smaller businesses, 15,000 employees struggling, one to 9 employees losing 15,000 employees, and then the mid-sized businesses between 50 and 249 minus 25K only added 5 to 3,000 at anything between 20 to these other ranges over here. And it's the large employers that made up almost all of the increase, with a 74,000 increase. Now imagine this, if we didn't have the large employers here, we would have had a massive negative report, because that's negative 40 plus 8. We would have had a negative 32,000 jobs report had it not been for those massive 500 employee plus businesses actually getting back to hiring. And we saw that in education, we saw it in healthcare, transportation, utilities. In fairness, utilities make some sense. Take a look at this. Trade, transportation, and utilities up 47,000. Financial activities actually picking up at 11,000. Education and health services, 24,000. And there's leisure and hospitality losing 5K. So let's look at the actual presser here. Let's get a little bit extra color on the report. So the actual ADP pay reported additional detail here. They cover 26 million private sector employees in the United States. This is interesting because I think they've got about 40 million across the world. So now, interesting note to see that they've got 26 million in the United States. ADP Pay Insight captures over 15 million individual pay change observations per month. Wonder if that's because you just don't capture some of the data every single month. So, okay, whatever. This is just a little bit of color of how they report. Okay, private added 42K. Here were the different sectors. We already saw that. Here are the regions. Look at this. The West actually added the most. So you could probably thank California, Oregon, and Washington for these ads over here. Not even really the mountain region, which would be like your Utahs or Colorados, but instead the straight up Pacific. Washington, California, that's where the jobs came from here. And again, mostly at those large establishments. I wonder if some of that has to do with it's the open enrollment period for Obamacare, the Affordable Care Act, health exchanges. Anyway, pay growth was unchanged in October. Pay growth was flat in October from the prior month, and that pay growth was 4.5% if you stayed at your job, and 6.7% if you, oh my gosh, 6.7% if you switched your job. All right, the largest pay gains went to financial activities. Now, I wonder if some of this is getting a boost because of the additional auditing that's being done for the private sector, especially private credit. Now that banks want to microscope a little bit more of their deals. Let me see here what the world interest rate probabilities are as well. So you've got, sitting at about a 69% chance of a rate cut for December so far. Now that data could update within the next 5 minutes, so we'll see. There's a little bit of a lag time on that, so we'll see what happens in about 5 minutes after this data came out. It'll be 15 minutes, which will be perfect. We do see bond yields relatively stable. The market's really not responding that broadly to this. I actually think this is a fantastic report, and I'm grateful that this is so positive because we really don't want a recession. I'm still blown away how accurate Kalshi was within 3,000 jobs there. Makes you think some people inside ADP are placing bets before the report comes out, doesn't it? But anyway, let's see if there were any particular heavy hitters over here. No. Although where they pace or show their actual bets might be a little bit different than Polymarket. Oh, here we go, activity. Let's see here. 10 contracts, 23 contracts. No, I don't see it. Here's a 600 contract individual, but I don't see any kind of whale bet over here. Let's see here. Minimum amount, 100K. Yeah, nobody bet 100K on that on Kalshi. Nobody bet 10K. A few people bet just over 1,000. All right. Anyway, so continuing on the actual report, that is the end of our report. So it is median change by different business. Look at who's struggling here. Wow. The small businesses, these are the ones who lost the most jobs. The small business is really suffering. And what do you have here? Only 2.5% for job stayers at small businesses of wage increases. Compare that to medium firms at 4.7 to 4.8, or large firms at 4.9. So really, the large businesses, even though we hear about those sort of Amazon layoffs, the large businesses, if it weren't for them, we'd be screwed right now in terms of hiring, at least per this ADP report. Now, of course, this is only a supplement to the actual Bureau of Labor Statistics government report, because the government report will also include government workers. But this so far is good. Getting some notes from the suits here that Treasury yields eked higher after the ADP data showed a bigger than expected increase in private payrolls. Dollar remained little changed. Yeah. Okay. Again, we got 42,000 versus the 30 prior. We did also get a revision that was up 3,000 jobs to the prior report. Let's see here. If we go through a little bit more, ADP report was one of the few monthly snapshots on the labor market, helping temper concerns of a faster deterioration of the labor market. This is true. And this so far is also in line with the Federal Reserve suggesting, hey, we're not falling off a cliff here. The labor market's relatively stable. There's no cliff diving. That was something we marked multiple times on our bingo board, that the Fed was really cheering stability in labor, which is good. And that's so far what we're seeing. Now, hopefully that trend continues. But as you can see, the Qs are slowly trying to march higher from their pre-market lows here. Got down to about 615 in the pre-market on the Qs, now sitting at about 618. We'll be looking for, we'll be putting together our alpha report on trading ideas in just a moment when we switch over to the private live stream. But anyway, employment at U.S. companies in October signaled some stabilization. Now look at that; they're even using the word stabilization. Yeah, I mean that's exactly the thing. Is you just don't want a fall off the cliff, and as long as you don't have a fall off the cliff, you could actually be bullish on markets. Potentially even go buy the dip. You know, yesterday was a great setup for dips, but you kind of wanted to wait for the labor market to see, hey, is this viable? Well, now you've got a viable ADP report to the extent that we believe that private data, right? Again, it's a survey of only just some businesses, not all. So then let's see what some of the other suits have for us. Okay, so we have, however, recent high-profile layoffs from companies such as Amazon, Starbucks, and Target have contributed to anxiety about the jobs market. Oh, there's no doubt about that. There's no doubt there is anxiousness, and really there should be, because that's probably our biggest Achilles heel in this economy. We just don't have enough hiring power to absorb the people being laid off at these rates. So we're hoping any kind of levels of layoffs slow, because those layoffs in October were quite a lot. After the Federal Reserve lowered interest rates last week for a second meeting, Federal Reserve Powell said that he sees a very gradual cooling. I mean, I agree with him. He's not wrong here. Contributed to anxiety about the jobs market, while jobless claims are generally subdued in the low firing labor market. Risks are developing with more dismissals. Yep. Okay, let's see here. Wage growth stagnated in the month. Expectations also were that we... Oh, hold on. What is CBC saying here?
Preliminary consideration of future increases. If you can imagine what it's like right now, Becky, to forecast revenue.
Oh, I saw something about the Treasury and bills, and this is just an update on the Treasury spending. I thought maybe the Fed was saying something because of the repo market, although it did settle down a little bit yesterday. Donald Trump's also lashing out because of the need to get the government reopened, because it's affecting airlines and the stock market and SNAP food benefits, and that it's time for Republicans to terminate the filibuster. I don't know how much enthusiasm there is for that, because that'll create some issues in the longer term. But I wouldn't be surprised to see markets go nicely green today and us to get a good rebound following this report. I'm going to see now if expectations have changed for the Fed rate cut in December. This... Let's see if there's anything else here. Nope. Okay, we covered all of that. And then we've got, nope, rate cut expectations still sitting at 68.6%. A little refresh here to make sure nothing's changed yet. 68.6%. So really, a relatively benign report, not a big newsmaker. You've got, a little bit of a dip that came upon us yesterday. Who knows? It'll be up to you if that's buyable. And now we wait again. That's kind of the fun process that we're in right now. We're in this sort of hurry up and wait where it's like, all right, well, I guess we'll wait for the November ADP report. But November ADP, we really won't get. Actually, rate cut expectations just ticked up a little bit to 70%. But what else do we have on deck? So later today, we'll get S&P and ISM services numbers. We'll get Challenger job cuts tomorrow. Those are all private reports. We won't get the public payrolls reports. And, I mean, then we're really just going to December. So kind of able to coast through with this data that we have here. If I go to December, I could give you a heads up for what date to mark on your calendar in December. I do think we'll be reopened by December. I think we'll reopen before the holidays. But the next ADP report will be on December 3rd for the monthly report. However, we will also be getting weekly reports now, which will be useful. And those weekly reports will start next Tuesday again. So they don't do them. But that's Sorry, that's Veterans Day. No, it should be, well, they said Tuesday. That's Veterans Day, so that's going to be interesting. Well, technically, it's next Tuesday. I don't know if they're going to actually fulfill that on a holiday. It might end up being that Wednesday, but I'm sure we'll end up getting an update from ADP before then. But they did indicate that they would release a weekly moving average of employment every Tuesday. And they didn't create any kind of contingency for if there's a holiday, but they also didn't create any kind of contingency for when the monthly report comes out. And what they did is they didn't do a weekly report yesterday, and instead they sort of just incorporated it into today's report. So we'll see. Anyway, yeah, there we go. Jobs report done. So very good. Now we'll see if the market awards this jobs report. So far, I've got pretty solid stability in markets. I've got Bitcoin bobbing around the 102s, bound between 107 and 103. I've got Dave & Buster's rebounding, at least in the pre-market. Who knows? Super low volume. I've got Tesla up 1-2. I've got the Qs down about, 10 basis points, something to that effect. And so we'll get to work. We're going to go do some fundamental analysis in the course member live stream. We're also going to be setting up our alpha report, so if you're not part of that yet, make sure you join that over at meetkevin.com. And when you join at meetkevin.com, you get lifetime access to the courses on building your wealth, the lectures, the live streams, the alpha report. You can also check out my real estate startup, reinvest.co or househack.com. Takes you to the same place, same company. It's just a slightly different name, sort of like how MicroStrategy is now just strategy, very similar. It's just a DBA. But anyway, go check it out. You can see our AI roadmap over at reinvest.co and househack.com. And consider investing in our convertible round. You can read the offering circular. You get 5% paid monthly. What's an annual yield? Paid monthly all the way through conversion. You get 100% of the stock upside. We're backed by real estate, and we're launching our SaaS product soon, which we're excited about. And then, of course, you can go to meetkevin.com to join that Meet Kevin membership and check out all the courses on building your wealth, plus getting that, hopefully for you, your tax write-off on joining. All right, so with that said, thanks so much for being here. It's always nice to see you here, and we'll see you in the next one. Let's go strategize now.